Welcome back, viewers. Today we will be testing the HG high and tight indicator. But before we do, if you have not watched our first video and the videos after that, you need to go do that now. At the Academy of Forex, we are building the best trading system possible as a team. And as a team, we will all profit from it when we are done. You can find a link to the first video down below. You can also find a link to sign up for TradingView down below. If you use the link below, you will save a little bit of money. You can also find a link below to join us on Discord. Discord is a free group communication platform. On our Discord server, we are having great conversations about all things regarding trading. One of the biggest struggles on this channel is people who use other platforms like MT4 being able to follow along. Sometimes it can be hard to find the indicators we are using on other platforms. And so on our Discord server, I have created a channel for indicator creation. And on that channel, I pinned links to freelancers who can code indicators for MT or for TradingView. So if you don't want to create a TradingView account, you can hire a freelancer for a really small fee and have them code an indicator for the MT platform. Or if you are on TradingView and need an indicator created, something unique or an indicator for a system you have developed, you can also have them code PineScript. So use the link for either MT4 coding or use the link for PineScript. Lastly, I get a lot of people that are asking me for the entire list of all the winning indicators that we have tested to date. And whereas I am not a big proponent of gatekeeping information, I've put a lot of time and effort into creating the content on my YouTube channel. And so I don't think it is too much to ask for the viewers to go through and view the content that I've spent a lot of time creating. Now, if you are not interested in supporting our channel by going back and watching the content that I have created, then I have developed a solution for you. I've created a Patreon account. I will put a link to it down below in the description. If you sign up for Patreon and you sign up for the $9 a month account, I will send you the full list of tested and winning indicators to date. I will also send you an updated list of the indicators that we are testing at the end of each week. Now, of course, you have to stay subscribed to the $9 subscription, monthly subscription, to continue to receive the updated list of indicators. But that way it will provide me with the support that I need to continue to provide the free content that I am putting out for everybody to view. Now, if you just love the channel in general and want to support us, then there is also a lower, I think $3 Patreon subscription that you can sign up for that will also help support the channel and keep things going so that way I can continue to produce the content and the open information that we are creating here in this channel and in our Discord server. Again, if you have not signed up for our Discord, then you need to do that as well. It is a absolutely free platform where we have real-time ability to chat and have conversations about trading. And again, if you want to support the channel with Patreon, then you can find the link down below in the description. All right, as I said, today we will be testing the HG high and tight indicator. But before we do, I wanted to put the indicator scoreboard up for everyone to see. So to date, we have tested 159 indicators. And out of those 159 indicators, 64 of them have been winners, which means that they have met or exceeded the 60% win-loss ratio threshold that we have set for them. The best ones so far were able to achieve a 100% win rate. Now you need to go back and watch those videos to understand the context of how they were able to achieve that. But as we are working on building the best trading system possible, you could take any one of those 64 indicators and get out there and start potentially profitably trading the markets with them now. So go back and watch those videos, make a list of those indicators, and get out there and see what you can do with them. But stick with us here as we work on maximizing your trading profits. All right, so as I said, today's indicator is the HG high and tight. And so you can see it here on the screen. It is rather small, and so it might be difficult to see. But basically, we have these dots above and below price action. And so this looks very similar to the parabolic SAR. But it is different. It isn't the parabolic SAR, even though it looks really close to. Basically, it's a moving average with an ATR incorporated into it to give us, this kind of indicator action that's taking place here. See if maybe I can see if this will help. There we go. And so that makes things a little bit more visible. Now you can see they're actually crosses that are above and below price action. And so this indicator is relatively simple in the way it works. It does work similar to the parabolic SAR whereas when price action drops below, or when the crosses, I guess I should say, jump above price action, that is an indication that you should be going short. And when price action or the crosses jump below when the crosses jump below the price action here, that is a indication that you should be going long. Now the creator, this is a TradingView member created indicator, and so you can find a link to it down below in the description. But the creator did give us some insight as to how to use this indicator, and so it is pretty straightforward as far as the basic mechanics of how the indicator itself works. They did say that there is one more component that we needed to add to it, and that would be some kind of ability to understand where trend direction is heading. And so the creator was using a few different moving averages, as well as, I believe, the Bollinger Band to identify trend direction. But what I have done is I have placed a exponential moving average. This is a 40 period, and so that way it just gives us an idea of trend direction. It's a little bit slow. It's not really fast. We're not really looking for it to do any kind of like price action break or anything like that. And so, I mean, we are in the sense that when price action is trading below, that is a trend to the short side. When price action is trading above, that is a trend to the long side. And then at that point, we would be watching the high and tight crosses to make a decision or give us a signal to go either short or long. And so when price action is trading below the moving average, we're looking for only short signals from the high and tight. When price action is trading above the moving average, we're only looking for longs from the high and tight. Makes sense? And so that's pretty much the setup that we have here. That's what we're going to be looking for. I'm going to go ahead and draw out some support and resistance lines here. And so if you haven't watched any of my previous videos, basically we're just going to map out areas of potential support and resistance with these black lines. Of course, they're not areas of support and resistance are not specific lines in the sand. They're kind of zones that you can watch out for when just getting an idea of what price action may or may not be doing. And so I start by mapping out the highest points and the lowest points on the screen that I'm looking at. And then from there, start working my way down. And we're paying more attention to the most recent price action over here, and then trying to get an idea to see if it aligns with areas back, you know, previously in the past. And it doesn't look like there are a whole lot of areas. Price action is not the best, and I'm really just kind of looking for peaks and valleys in price action as I'm kind of mapping out these areas. And don't worry if don't worry about being right or wrong. There really kind of is no right or wrong when you're doing this. You're just kind of creating zones that you can keep an eye on as you're doing trade analysis, or as you're back testing. You can kind of keep an eye out on price action to see what might be happening, and get a better feel for being able to read price action. And so I think this is about enough. We got quite a few on screen. This price action is really strange on this pair. And so, all right. And so we've kind of mapped out a grid here on, I guess I wouldn't say really a grid, but we've mapped out these lines here. And they, like I said, will create areas of interest as price action gets to them. And beyond that, yeah, we will be watching our indicator and our moving average to get an idea of what is happening as far as price action goes as well. And so we get our first signal right here. It is a long. Price action is above the EMA. The cross jumped to the downside, which means that it's pushing price action up for a long signal, and it did really well. Got us to take profit. Price action is punching along. And here's another interesting note, another interesting thing that you can add to your arsenal when trading price action or keeping an eye on price action analysis is Fibonacci levels. And so Fibonacci levels can be really significant areas of support and resistance. Now, there are many different ways that you can trade Fibonacci areas. I know on, for example, the trading channel, they use a Fibonacci extension to basically project out Fibonacci areas, Fibonacci levels, to get an idea of where price action may start to stall out or start to weaken and bounce off of, and look for basically reversals. You would map out, think of a Fibonacci extension just as the name implies. It extends the Fibonacci levels either above or below price action for whatever levels based off of the historical price action at that point. And so one thing that I like to use instead of Fibonacci extension is a Fibonacci retracement. And so, oops, hold on, let me get it right here. And so basically what you're doing is you're going from high, the uppermost part of the reversal, to the lowest point, or vice versa. If you're looking for a price action that is going down instead of up, so in this case price action is moving up on the retracement, so we would draw a line from the uppermost point here, and then we would draw it down to the lowermost point here. And so now you can see, and I have this only set to 50 0.50 retracement, so basically a 50% retracement on this move. And so you can see here that I drew it from the top of this move, basically when price reversed, all the way down to where the bottom of this next reversal point took place. And we're looking for price action to come up to the 50% retracement level. Now, of course, you can go in and you can add in multiple levels, multiple Fibonacci levels to the retracement. I personally look for the 50% retracement more than anything, because that seems to be a really significant point when price action starts to stall out. And so here's an example where price action came up, it hit the 50% retracement level, and then made a sharp retracement back down, or a correction. And so on a lower time frame, say you drew this off of a daily, on the lower time frame, that would have gotten you a really decent trade. You would have gotten, let's see, if you got it top to bottom, that basically would have been about 300 pip trade at the 50% retracement, and then letting it come back down. And you could then draw, what you could do is you could draw a 50% retracement off of this low to this high here. And you see that the move at the 50% retracement came right down, touched it here, and as soon as it did, it painted this big long green candle right here. And so you see how you're just kind of following the 50% retracement back down. And so that is also a really valid way to find areas of support and resistance. Like I said, lots of traders do that. Lots of traders use Fibonacci levels, and to be honest, you will find that if you start playing with Fibonacci levels, that a lot of indicators kind of coincide with the Fibonacci levels as well. All right, so let's keep an eye on price action here. So basically what I'm doing at this point is the only time I'm going to consider another valid trade in one direction or another. And so we would be looking for another trade to the upside here for a long. At no point has the high and low jumped to the top. And so if it jumps to the top and then jumps back to the bottom, I'll consider that a re-entry. Otherwise, at this point, we'll just consider this one long trade. All right, and there we go. And you'll notice that the high and tight, I think I called it a high and low a moment ago. The high and tight is working really well with this moving average, and that's because the high and tight is based off of the EMA, and I am using an EMA just on a different period, a little bit slower, so that way I can really confirm that price action is in a specific trend. So we picked up a down signal here, short, and unfortunately that one did not work out in our favor. Let's go ahead and keep playing it out. And it's a shame because it would have gotten us to take profit had we not gotten a strong pullback right here as soon as the signal took place. There we go. Spit out the words. All right, so we have a long signal right here. That one did not work out for us. Go ahead and keep playing it forward here. Now we've picked up a short right there. That one did not work out for us either. Then a long right there. Price action really isn't doing anything significant. It's just sitting here bouncing in this area, not really making any kind of significant moves one way or another. And so at this point, there's nothing we can really do to read price action. Let's see, actually, let's back up. We'd have been on that one right there. That would have gotten us to take profit. There we go. Keep snatching up our support and resistance lines there. All right. Go ahead and play that out. We pick up a short right here. I'm afraid it stopped us out there. It did. So that one stopped us out. And we'll keep playing it along here. There is a long there. On that one. Let's see. We were able to stay within the stop zone, not get stopped out, so that one would have worked out for us. Price action still is not moving. It's just sitting there, just riding along sideways. That's the worst kind of price action because you really just cannot read it whatsoever. I mean, it's just kind of bouncing along areas, not really making any clear moves. Till now you can see it starting to push down, get some kind of significant push. Came down and bounced off this level right here, which you see in the past. Recently it has bounced off a few times. See if it pushes down to this level and starts to correct itself, or if it pulls immediately straight back. Sometimes when it breaks a level of support and resistance, it'll almost immediately bounce back and rubber band right across where it came from. Nope, it pulled down, almost touched that area, then painted this super big candle right here, big engulfing candle. That's a pretty good sign that price action is going to start pushing its way back up, but still a little bit premature. We haven't gotten a real clear candle set up yet. I mean, it could just go ahead and bounce right straight up, but I would wait for more confirmation before taking that trade. And it's come down, it's bounced off that area one more time. At this point, it's kind of a double bottom, loosely. I mean, you could consider it a double bottom, but still I feel like it's a little premature to take that move. Yep, see, that's what I was concerned about. So let's go ahead and play it out some more. Now it's come down to the next level, bounced off that area. Still no real good price action setup. Let's keep playing it forward. All right, right there. It's a pretty decent price action setup. That's something that I would consider a valid entry at that point. And so basically what we had was a strong push down, an immediate engulfing candle up, and then almost immediate same size engulfing candle down. Yeah, it's not quite completely engulfing, but pretty close. And then immediately bounce straight back up with these strong candles to the upside. That's a really good indication that we're going to get at least a little bit of a push to the upside. Is it guaranteed? No, but it's looking decent. And there you go. Decent little push to the upside, right up to our moving average. Then it kind of deflected off of our moving average. Let's see what we have going on here. We have some crosses to the upside, pushing us downward. We did pick up a crosses to the lower side here. And so this would have been a valid short signal right here, like we were talking about at the beginning of the video. Let's go ahead and play it out. And it would have gotten us to take profit. so not too bad. Oh, and again, you could keep an eye on Fibonacci levels. I don't think this one quite made it to the 50% retracement. It looks a little shallow, but depending on where you would have drawn it off of, technically speaking, this would have been the point up here that you would have drawn your Fibonacci level off of. It came really close. You see that right there? I mean, that was within, let's see if we can draw it out, 30 pips of the Fibonacci 50% retracement. And it never came down and broke the bottom of this retracement. And so technically it's still a valid setup at this point. You could definitely hold this position and see if price action, I mean, price action really looks like it's wanting to push up some more. And so I would bet that price action is going to come up and hit the 50% retracement. But at this point, since it came up and got so close to touching it and then deflected, if it does come back up, it might break through that 50% and not really have a pullback off of it. So this move here would have been the trade once it bounced off the EMA and pushed its way back down at the 50% retracement. So let's go ahead and play it forward. Like I said, it really looks like price action wants to go up. Definitely not something I would make a trade on, but just kind of observing what's happening with the market. Came down, bounced off this level again. That's not really a great price action setup that I would have taken. It is, it did give us a double bottom, but that's a little sketchy. Now at this point, it's came down, it's touched this area, it's bounced off of it, it's hit our EMA, pushed back down again, and hasn't made a lower low, but it's trying to push its way back to the upside with this big green candle right here. This is a relatively decent price action setup that again is telling us that a push to the upside is very likely. We're probably going to get a break of this EMA. It's coming down and squeezing into this area right here. And if it breaks, it might have a quick jump to the upside. This is something that I would feel reasonably confident taking a trade in. Let's play it out and see if it goes. Yep, it broke. And it's now starting to teeter along, and there it goes. Push to the upside. And we got a long trade on it right there. I think maybe nope, we would have been within stop zone. Gotten take profit. All right, go ahead and play it out. Let's see what happens. Picked up a short right there. Let's map that out. Did it get us there? Yep. That one got us to take profit. Keep playing it out here. Still riding down. Our high and tight still giving us down signals. Price action isn't moving very cleanly, but it's moving. Nothing that I would really look at with a lot of confidence. Broke to the upside right there. Let's see if we can get a little bit more of a push out of it. Let's go ahead and, yeah, we would have gotten take profit. Would have been close, but we would have gotten there. All right, there you go. And so obviously we had, quite a bit going on with Fibonacci's and support and resistance and price action and our indicator. But this is the, this is kind of the name of the game. You got to have layers of confirmation on top of confirmation to really get a good idea of what is happening in the market and where you should be taking trades. And so the likelihood of you finding just one single lined indicator that's going to get you in and out at those perfect times is extremely unlikely. That's why we're doing this whole project, to build a trading system, not just find the best indicator. We're looking for the best indicators to build our system off of. And so I hope, if anything, these videos where I do price action readings and support and resistance and talk about Fibonacci levels and so on will give you an idea of how you can layer things on top of each other to really get a really good idea of what's happening with price action and where you should be and should not be taking trades. And so let's check out our indicator here and see what we got. Let's count them up. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12. So we have 12 signals all together. And we have 1, 2, 3, 4, 5, 6, 7, and 8. So it barely edges over that 60% level. Not too bad. I'm not surprised that it did well. And that's because it is based off of the exponential moving average, which, when we did the moving average head-to-head testing, the exponential moving average was one of the best moving averages that we tested. And so it stands to reason that if an indicator is built around that same moving average, that it will do rather well. And then we layered another exponential moving average on top of it for trend confirmation, and it did rather well. All in all, a decent little indicator setup, and definitely would have gotten you into profit had you traded for this entire year. So there you have it. It will go on the yes list, and we will move on to the next indicator from here. If you have not already, like this video, comment below, subscribe to the channel, and turn on the bell notification so that way you are notified anytime I post a new video. As part of the team, it's important that you are seeing the new videos as they come out, so you know what it is that we are discussing and what indicators we are testing, have tested, and have not tested. Also, like usual, there is a link below in the description to the Discord server. You can join us on Discord so that way we can further discuss the indicators and have discussions as we move forward building our trading system. And lastly, like usual, there is a link below to TradingView. If you like what you see whenever I use TradingView, and you are interested in signing up for TradingView, if you use the link below and sign up for a paid account, you will save a little bit of money. So, all right, everybody, I will see you on the next video.